CWA Global Markets Managing Director, Peter McGuire. Peter, good morning. Thank you very much for joining us.
Good morning, Mark. How are you?
Good, Peter. Now, we saw a stellar GDP number from China yesterday. Does that tell us that we're going to continue to see stellar demand from China for commodities right across the spectrum?
Well, Mark, we believe so, and a couple of points that need to be considered. You mentioned regarding the numbers coming out for crude oil. The same can be said for coking coal and thermal coal. China is now a net importer of both of those, where it was a net exporter in 2003. So the whole commodity complex is certainly very much alive and kicking, and there's a long way to go yet.
What's the global supply-demand situation, Peter, within the oil market right now?
Well, I look at it from an OPEC perspective, Mark. I'm sure that they're very satisfied at $80 to $85 a barrel. We understand the US dollar has strengthened, so if you're getting paid in US dollars, you're getting around about another 9% from what you were receiving in December. They're quite contented, though we think that the crude price will march forward from here, well into the 90s and possibly even through 100 by the end of the Northern Hemisphere summer.
Are we ever going to go back to those lofty levels, Peter, sort of 140s, approaching 150s? Is that pie in the sky in the medium to long term?
Depends on how far out, Mark, but I think if we're talking together in 3 to 5 years, I wouldn't be surprised that we're going to take those numbers out again. And we need to consider, Mark, that the crude market is up around about 125% from its December 08 lows. So it really was hit very hard, and there's a long way to go yet.
What about non-Chinese demand, Peter? Where else is demand coming from, particularly for oil right now?
Well, you're going to see a resurgence across that whole Asia basin and, of course, India. Now, that's going to be the next shoe to drop because the growth out of India is just spellbinding, Mark. So the emerging markets is where it's all at. We understand what's going on as far as the whole Asia basin. Indonesia, Thailand, Malaysia, all of it is just on fire. So we think that whole basin and Pakistan, of course, and then you look at South America, Mark.
It sounds like a no-brainer, Peter, you know, when you talk about investing in maybe oil and specifically copper because of the infrastructure demand in nations like China, like India. But what are the risks out there right now?
Well, they're highly volatile markets. We need to take that into consideration. Nickel, for an example, Mark, was trading at $10,000 in December 08. Now it's at $27,000. It's up 170%. Copper's had an incredible rise, about 165% in the same time. So they're highly volatile, and if you're on the right side of the trade, you can do extremely well. But you need to be very conscious of stops and just trade the market with the right indicators.
What would you say, then, is your preferred pick right now in the commodity spectrum?
We're very conscious, Mark, that crude oil and gold are where we think a standout. Gold's only 6% from its all-time high. We see a resurgence in the gold market to mirror what India's going through in the years to come as far as Chinese demand. So we just think that there's plenty of upside in those particular markets and, of course, roll it across, of course, to silver, palladium and platinum, Mark. So that's where the real true money is going to be in the short term.
Peter, thanks a lot. Have a good weekend.